Hey guys, so Casper here, different video for the day, and actually it's the first time. I want to do something different to see if it, catches a bit, you can say. I want to watch this video here of a big YouTuber on why gold is rising so much and so quickly. Very interested to see if he knows why gold is, why it does what it does. Most of the time, people listening to mainstream media has no clue. Let's see what he has to bring to the table. And yeah, as always, before we go, right? Substack, big update on Gold Ventures portfolio, a big player on Twitter, and he is the master of financial analysis on junior miners. And I've bought two of the stocks that I looked at here. So, and yeah, it's all there. Getting a lot of positive feedback, which is good. Follow me on X as always. You know the deal. Let's dive in. Let's see what happens. We might learn a thing or two. So, let's see what he has to say.
And the big question is why? And the answer is nobody knows. It is, after all, just a worthless, shiny rock, right? Wrong. Gold is moving up for a number of reasons. First, let's take a look at the price. Gold is now above $3,500 per ounce after breaking out from a multi-month consolidation pattern.
It is over 3,600 today. Yeah, that's insane. We are on the way to 4K.
Where it tested resistance at 34.30 5 separate times since April of 2025. Now,
Technical analysis, very simply, but sometimes all you need is one line or two, and you should be good to go.
$3,500 per ounce is significant because it is 1,000 times more than what the price of gold was when we delinked from the gold standard.
No, it's 100 times. It's 35, 350. It's 100 times, but still, it has risen quite a lot. And it's funny, right? We get these 100 times more. We paused at 3,500 for basically half a year. Now breaking that as well. So that is cool. But yeah, 100, not 1,000, but still, hey.
Back in 1971. For decades, the price of gold had been held at $35 per ounce by law, meaning that every 35 US dollars were redeemable by certain parties for an ounce of gold. And when the United States had issued too many dollars to make good on that promise, we told the rest of the world, sorry, you can't actually have your gold. And from that point, the price of gold has consistently, though with lots of volatility, moved higher and higher to the point where today it is 1,000 times higher than where it was a little over 50 years ago.
That was in 1991, 71, my bad, where we went off the gold standard in the US. Why did we do that? Basically, the governments had to spend more money. They had a war to finance. They had a whole lot of stuff going on. So they left the gold standard in order to not be restricted by a budget, right? Because that is what gold is doing. You're restricted to basically a budget. You can't overspend. And you know the deal. The governments all around us, they love to overspend. And when suddenly inflation comes, they go out and say, oh, well, we want to bring down inflation. Inflation is bad and it's this fault and that fault. No, it is the government's fault in every single country because our system is based on debt, right? We want to decrease the value of the prior debt in order to pay it back with money that is worth less. The same amount, but it's worth less purchasing power, right? So gold goes up 10% per year. That is your overall inflation when you count in everything. Housing, food, water, electricity, clothes, you name it, stocks, everything combined, 8 to 10% per year is what we get inflation-wise. That is your true average number, not 2.3% that they say every year or so, whatever it is, on average. No.
The first reason gold is moving, which is very important to know when you are investing in gold, is that gold tends to anticipate the effects of monetary policy. Here's
True.
What I mean by that. If you take a look at this chart, this is the price of gold from 2014 through 2020. And you can see that the price of gold for years was volatile but moved sideways, never being able to jump above that 1346 price. But starting in June of 2019, the price of gold broke out and started to move higher. Now, you may not remember this because it was about 6 years ago now, but
Oh, I remember.
mid to late 2019 was when banks started to run into problems. Liquidity in the financial system was drying up. And in September of 2019 was when the Fed had to start not QE in order to bail out the repo market. Gold began its move right before that and continued its move higher through the money printing.
Again, this was late 2019, right? The repo markets, basically the banking internal lending system to each other, they froze, right? There were no one lending to one another because everyone was afraid that the money that they lent to the other bank, that bank couldn't pay it back. So everything froze, and rates, or what's it called, they skyrocketed. They had to step in, and they can't just go, hey, we're gonna bail out. If we have to have a reason. That's when 2020 came. You know exactly what happened in 2020. That is my take on it. There's always a reason to things happening. And the repo market, again, 2020, you know what happened?
That started in 2020, ultimately rising 50% before it topped out in August of 2020. Keep in mind, by August of 2020, zero inflation from the money printing had hit the economy yet. Prices of goods and services had not started moving. And yet, the price of gold peaked and started to move down.
Exactly, right? Gold is anticipating inflation. It went up by roughly 50-60% over 18 months, give or take. And then we saw inflation, from like 2021 to 2022, we saw inflation, really starting to kick into gear heavily. Everyone remembers, while gold went down. Now we are almost, this is the consolidation pattern, from 2021 to 2024. We are now almost at 4K. So basically a double. This time 100% gain from gold. I mean, gold has increased 100%. When gold starts to correct at some point in time, by the way, the correction will be smaller and smaller. Remember the inflation we got when it rose 50%? Now we have 100% gold increase. Yep, the second wave of inflation is going to hit us in the face in 2 years' time, 1 year time, depending on when gold starts to
down from there, ultimately moving sideways again for a couple of years. Now, again, this is because gold anticipates the effects of monetary policy. By the time inflation came around from all that money printing, the market was looking forward at the tightening the Fed was going to have to do. But gold had already made its move by the time the inflation came around. And we see a very
that's true. I like him. He's really knowledgeable.
Very similar pattern playing out right now from 2020 all the way through 2024. Price of gold moved sideways and tested resistance around $2,000 an ounce multiple times. And when it finally broke out, starting in March of 2024, the move was anticipating the future results of monetary policy changing, interest rate cut.
April 2024, March 2024. When was that? That was when we said on the channel, gold, silver stocks and gold stock is gonna blast. That's the starting point, and we haven't been looking back ever since. There are multiple reasons. One of them, and probably the biggest one, is that gold at that point in time broke out against its 40 to 50 year downtrend, breaking massive cup and handle. It broke at a ratio of 7. The measured move is almost 50. That is why we said on the Substack, hey, now is the time to start to find good setups and remain long.
Cuts and future quantitative easing in order to deal with the government's bloated spending and borrowing. And this is what is causing the new recent breakout from the mini consolidation pattern and testing of resistance that we've seen over the last couple of months. Because now
Also, it's good to see, that you need a reason to get in. You want these pauses to get in. So if you're on a bull trend, you don't buy it blindly. You wait for a reason, because then you can put in your stop loss and all that, because you might be wrong, right?
Odds of the Federal Reserve cutting interest rates has hit over 90% for their September meeting,
90,
despite the fact
okay.
that inflation has not come back down anywhere near the Fed's target. Now, why
And
did
it
I
won't.
say that this is important to know if you're a gold investor? It's because by the time the effects of monetary policy have actually hit the economy, gold will have already made its move, which means if you're waiting for inflation, you're going to be too late. Just like we saw in...
Yeah. Do you remember in 2022 when, inflation was really high and all, the people that know so much said, oh, gold is not an inflation hedge? No, it's not, because it's front running. It is expecting 18 months down the road, roughly, that we're going to see inflation. So when we have inflation, people will blame gold for not moving, but hey, it had already happened. You're too late.
August of 2020, gold peaked before inflation hit, which means we likely still have room to run for the price of gold, but much of the move that's going to happen has probably already happened, which means if you're going to be trading it, you do want to be careful. Okay, so if gold anticipates the effects of monetary policy, why is that? Well, we have to look at who the biggest buyers and holders of gold are. The answer is the people who do the monetary policy.
And also the people saying, don't buy gold. It's an old relic.
So it makes sense that the price and the movement of gold is going to be in anticipation of those effects. When you look at central banks who set interest rates and print money, they now own more gold than US Treasuries for the first time since 1996.
What a simple chart to show it, right? Gold is taking over bonds. By the way, bonds, that bull market, the 40-year bull market in bonds, game over. By the way, this is Tavi Costa. I'm going to interview him next week on Wednesday.
For all of the 80s and all of the 90s, central banks were selling gold while they were accumulating US Treasuries. From about 2000 to 2015, that trend stopped, just moved sideways. And then starting in about 2015, the trend reversed and central banks started accumulating more and more gold and selling off their treasuries.
By the way, look at this here. 2021, we broke out from the bottom in favor of gold, right? So 2020 was a big sign.
If we want to take a look at this another way, we can look at gold compared to all other sorts of international reserves other than treasuries, looking at things like the dollar, sterling, yen, the franc, the mark, the euro, the renminbi, and others. You can see again, about 25 years ago, gold holdings finally bottomed out, moved sideways, and then about 10 years ago, started moving upwards again. You can see gold holdings as international reserves are nowhere near where they used to be in the 50s and the 60s, but they are definitely moving higher again, taking a big chunk out of the dollar mainly. Well, you might be thinking, wait, hold on.
Nice.
I've heard dollar usage around the world is actually up. If you've heard that, you'd be right. The dollar's share of international transactions topped 50% earlier this year, which is significantly higher than it's been for years. And this is as a percent of all currencies.
I guess it has to, maybe tariffs come into play. This is tariff stuff here, the Trump tariff thing. Could it be the reason why? I don't know.
So yes, the dollar is being used more in global transactions, not less. But these two things together are perfectly reasonable. This is Gresham's law in action. Bad money drives good money out of circulation. In other words, people will hoard the forms of money that store their value the best, and they won't get rid of it, they won't sell it, and they will get rid of the forms of money that don't hold their value. This is why you hold gold and you use dollars for payments.
That's a good thing, when bad money drives out good money. I can't remember who said that, but that is so true. That is so true. Until it pivots, of course.
This is why you hold Bitcoin and use dollars for transactions. It doesn't make any sense that people who say, oh, we need to see transactions start to be done in gold or
Bitcoin has been around since 2010, so that is 15 years. Those 15 years, we have basically had the Nasdaq bull run basically going straight up, roughly, right? And if you do an overlay on Bitcoin and the Nasdaq, you will see that they are heavily correlated to each other. And I do expect the Nasdaq to underperform massively for the next 5 years. Therefore, Bitcoin will do the same. It has done well, I'm not going to lie. I mean, the whole Bitcoin has been the best performing assets of a generation. But yeah, let's see.
Actions start to be done in Bitcoin for it to be money. You would not expect that until people no longer accept those old forms of money as payment. For instance, you, for your wages, for the sales of your assets or your goods or your services, do accept dollars as payment. But there might come a time in the future where you say, nope, I'm no longer willing to accept dollars as payment. You can pay me with something else like gold or Bitcoin or something else, but I will not accept dollars. Only at that time does...
That goes for every fiat, by the way, not just the dollar, but the euro as well. You know, they are all coming down together. Don't get me wrong. It's not just the US dollar.
A currency move from a medium of exchange and be replaced by something that has been serving as a store of value. In other words, a money's store of value function will be replaced by a superior form of store of value. In other words, between a money's two functions of being a store of value and a medium of exchange, the store of value function will be replaced first.
Since 1971, money has not been, fiat has not been a store of value, right? They're getting diluted, 10% per year on average, 5-10% per year. And if you measure again, I think the US dollar is down 98% compared to what it was, 50 years ago or 40 years ago. So
by a alternate store of value. And its function as medium of exchange will accelerate as people try and use it as much as possible. Once people no longer accept it as payment, that's when the new store of value also becomes the new medium of exchange. Not before that though. Now keep in mind, I am not making the case here that just because the price of gold is going up quickly again, and just because the dollar's usage in global transactions is accelerating, and just because international reserves are seeing a higher percentage in gold versus dollars, I am not saying that I think dollars are on the way out anytime soon. But what I am saying is everything you are seeing happen right now is something you should expect to happen if the dollar was on its way out at some point in the future, even if that's decades down the road.
The big players like China and of course Russia, but also India and the really big economies, they lost all hope for the dollar when the Western world sanctioned Russia and took all their assets in US dollars, right? That's when they said, if they can do it to Russia, they can do it to me. If we don't behave according to their standards and whatever they want us to do, they can take our US dollar, so yeah, that's when things went really bad for the US dollar, and the faith over time has been lost. It's being lost.
People forget when we read history books of the collapse of the Weimar Republic in Germany and the collapse of Rome and the dilution.
Yeah, Rome is a good example. Yeah, I agree.
Of their gold and silver coins. Those things took place over decades and sometimes centuries. Definitely not overnight. All right, now let's get into some practical tips for anybody who wants to invest in gold and maybe doesn't know what they're doing because this is their first time. Number one, usually, rule of thumb, it's best to hold the gold yourself. People say if you don't hold it, you don't own it. And for the most part, that's true unless you live in a situation where that would be unwise or unsafe. For example, you see all these gold bars behind me in my YouTube videos. I regularly talk about the benefits of owning gold. I do not keep any physical gold with me anywhere whatsoever.
I was just gonna say, if that was real gold, I would assume they would be 20 kilos or something like that. That would be a fortune.
That would be unsafe for me and my family. I do, however, own a lot of lead, and I do have that physically with me all the time. So if you are in a position
that's cool
where you are not able to hold the gold physically in a safe or in the ground or in your walls or whatever, then the next best thing to do is to keep it in a vault where it is allocated, segregated, insured, independently audited, and in a country with no history of gold confiscation and a high degree of economic freedom. I'm going to say that one more time. You can replay this if you need. Allocated, segregated, insured, independently audited, in a country with no history of gold confiscation and a high degree of economic freedom. And lastly, if you just want some price exposure to what gold is doing, especially if your money is all tied up inside of something like a 401k, then getting something like a gold ETF like GLD is going to be perfectly fine. The biggest hedge funds in the world use GLD. It's good enough for them. It's good enough for you. But
the only difference here, again, I agree the GLD is good. However, if I'm not saying that's going to happen, it's a low probability, but if they reevaluate gold to, let's say, 30K, you will not see that price exposure on the GLD. You will be settled at the current price, which now is 3,600. So if they do, as mentioned, 30,000, you will not see those gains, because they will say, oh, we don't have it, it is what it is, and they will dissolve that kind of ETF. So you will not see those gains. That is the only downside to it.
There are plenty of others if you want a different gold ETF. And finally, if you want access to more insights like this, there are actually quite a few things that I don't talk about on YouTube, and I send those out in my free.
I think that was it. Overall, I think everything he said made a lot of sense. But that primarily gold is rising due to inflation expectations. We are now up 100% in basically 18 months. What do you expect in 2 years' time with regarding to inflation? Yeah, it's going to be insane. So that was cool. I like what he said, and have a great day, guys. That's all from my side. Cheers.